All right, hi everybody. This is Dr. Keith. How's everyone doing tonight? Great to see some familiar faces there. Hopefully I'm coming through loud and clear. I did have to switch computers today as nothing like waking up, getting your day going and your coffee cup, the handle breaks off all over one of my many computers, right? So my favorite computer has problems. Anyway. Okay, so can everybody see the screen okay? It should say data mining for futures, Forex, and stocks. Hopefully you can all see that. Perfect. Hey, Jim. Great to see you. Okay, so I wanted to do today's webinar for a couple reasons. But before we get started again, take a look at this slide. Just remember that you should never trade with money you can't afford to lose. It's been proven not only from a common sense standpoint, but from a mind frame that if you trade money you shouldn't be, you're not going to make logical decisions anyway. Okay. So please make sure that you really do follow those rules. I certainly don't want anybody to lose money that they're paying rent for. Okay. Brad, and I remember, nice to see ya. I hope to go back to Tampa someday soon there. Okay. So anyway, as I was saying, today's focus is going to be on data mining. And I'll probably spend most of my time giving some examples of stocks, but I'll also show some futures or Forex, but they're all the same. It doesn't really matter what you're trading, okay? Yeah, exactly. When if the borders do ever reopen, that's for sure. But the reason, anyways, what I was saying, the reason I wanted to hold this webinar was for two main reasons. One, I know many of you have this data mining package, and it's always good to go and review and re-energize you with this, because this is something that I update every year right around the Christmas holiday. And for those that have purchased or purchase in the future, right, you get that update. So it's a one-time purchase, you know, and you get updates every year. And when you use it and you keep it in front of you, you're basically looking at high probabilities of over 80%. And one of my great clients, good longtime friend, actually sorts by 90%. He only looks at 90% and higher. But if you just think about that for a minute, if you have data that we basically give you the data that says during this window in time, okay, this particular stock, let's just say for this example, heads 10% higher over this next 45 days, 30 out of 32 years, okay? If a broker called you up and told you that, you would be begging them, right? Back in the days when we called brokers up, right? You would be begging them saying, yes, let me get in. Well, you have this data right in front of you now, okay? And if you only use a data mining package, and I'm going to show you my real simple rules on how I enter, there's people that make livings just by doing this, okay? There's so many stocks out there, there's so many Forex, so many futures, that if you just focus on the ones with the highest probabilities during a certain window, you can be very, very successful at. And those of you that trade smaller time frames, okay, the data mining that I use is based off of a day, okay? So it's whether it's the next 20 days or 30 days or 10 days or 50 days. But even in that example, if you know something over the next month, for example, the bonds that are coming higher, right? If you look at bonds, of course it's going higher, it does every year this time, okay? But if you realize that, then you can certainly look at your day trading or your shorter term trading and look for triggers in that direction, okay? As I've telling you, those of you that know me, I don't do a lot of day trading anymore because I don't have to, and I spend less time and make more money swing trading. But there are some times I love to day trade, okay? Tomorrow's one of them. Tomorrow typically is a very bullish day in the market, just like we've been saying over the last couple of weeks has been bullish, okay? So, you know, why look to day trade either the SPX or the futures market or the NASDAQ tomorrow? Yeah, I will be, okay? Because I know there's a high probability tomorrow it's going higher. So I'm looking for long plays tomorrow, okay? So you can use that as well. Or if you know that Apple has a huge opportunity, you know, over the last month to the next month from now to go higher, if you go back and look at triggers on Apple, right, maybe off a 15-minute chart, a 4-hour, or a daily, right, you're going to find good results. And that shouldn't be surprising to you. So data mining I originally developed, you know, the way I use it is for swing trading off daily charts, but you can absolutely use it off smaller time frames, okay? Yeah, exactly, Brad. How'd that work out? Again, these are they're high probability opportunities. So if you have that data again, that's what we're looking for as traders, to have that advantage, okay? Okay, so anyway, like I said, there's two main reasons I want to hold this webinar. One, to refocus on energy, and then two, to kind of show you exactly how I do it and how I use it, okay? Okay, so, you know, for some of you are new or you haven't followed me before, and I just want to explain here, big picture, first of all, you know, what when I say data mining, you know, what does that mean, right? Because it could mean, you know, it could mean a lot of things, but it's really, my definition is, it's the probability of something going higher or lower with high probabilities during a certain window time, okay? So, you know, let's say July 1 to August 15th, okay? You have to have dates to data mine, because if you don't, you're not going to be able to give percentages and ratios and all that good stuff that I love to do. And the reason you say, well, gosh, Dr. Keith, you screwed up. You got right in the middle of the slide there. Do you brush your teeth every morning, right? Well, the reason I put that in there is, you know, trading from a professional mind frame, the professionals, the one that move the markets, okay, they are about routines. Okay, I can't stress that enough. They're about routine. So the reason why a lot of these stocks, and again, when I say stocks, this all plays a role the same way with futures and Forex, okay? But when you're looking specifically at these stocks, I'm going to show you some of these probabilities that's coming up, that's year over year. The question I always get is, well, why? Why does that happen? And it doesn't matter. But the reason it's happening is the people that move the market, the big institutions, the really large traders, okay, they have routines. So just like we brush our teeth in the morning, at least hopefully we do, right? They buy things or sell things during certain times of the year just because that's what they do, okay? So big money have routines, and when you can understand that and go with those, when you get triggers during those windows, you're going to be extremely successful at it, okay? So today's going to be pretty much a working session, meaning I'm just going to go and show some charts in a minute and explain again exactly how I use this simple trading system, okay? You're not going to see when I show charts, I'm not going to show any of my other indicators other than the Laguerre and the stochastic, because the real power is the data itself. So in this is in a couple examples here just before we get to live charts. I want to make sure you understand what this is showing you. So the stock in this case is APD, okay, Air Product and Chemicals. If you go long on October 24th and you exit on January 5th, this trade has gone higher, so it's made money during this window 35 out of 36 years, 97%, okay? So just by going long on October 24th, I don't know if it's because of my wife's birthday, I'm not really sure. But on October 24th, and you exit on January 5th, you made money on this 97% of the time since the stock's been in business 36 years, okay? So I would love somebody to tell me how that is not advantageous to know, okay? Now, again, as I'll show you in my examples, I don't just go long on that date and exit on that date. I actually increase my probability, okay? Because I wait for triggers during that window. And there's sometimes there's 3 or 4 triggers during that window, okay? But just knowing that should be very exciting to many people that are trading, okay? AT&T, October 24th to the end of the year, it's gone higher 30 out of 35 times, okay? And these, again, this is 30 out of 35 years is headed higher, okay? And in my data mining, I'm going to show you, I give percentage moves. So you know the percentage move of that, which can be very handy when you're pulling the trigger, right? The S&P, you go long right before Thanksgiving, you exit right before the new year. It's gone higher 32 out of 37 years, 87%, okay? So again, just knowing that, so if you were a swing trader, or let's say you're a day, or you trade off the 15-minute chart, let's say, okay? You trade off the 15-minute chart. I'm only going to look to go long during this window time, okay? See how I made that nice smiley face here? Just go long, and if you go back, more than likely, in your charts, during this window time last year, the previous year, the year before that, the year before that, if you look at your own trading system, whatever that is, okay, and you look at the smaller time frames, the daily time frames, you're going to like the results. Now, if you're trading off a 1 minute or a tick chart, I'm not sure how much, because that's such small time frames. But if you specifically 15 minutes or larger, okay, that the seasonality can really help you, okay? Tick charts, really, really high frequency, small, trying to get 1 or 2 ticks and out. Nah, not a good strat. I mean, I don't know. I've never tried it, but that to me doesn't seem like a great strategy using this type of data. But larger time frames, 15 and above, should be very, very advantageous for you. Okay. Okay. So let me kind of summarize before we get to the fun stuff here. There's many ways you can use the data mining package that I have. And again, those of you that have it, I want to make sure you understand it, because I was talking to a client the other day, and I realized that they didn't realize certain ways to sort through the data. Okay, because you may just want to look at by month, some may want to look by winning percentage, some may want to look by average percent move. So we're going to go over all that. Okay, you can do all of that here. Okay. Here's what many clients are doing. They're creating a rolling watch list by month and waiting on triggers. Okay, so what that means is, and you'll see in a minute when I show you my data mining. Let's say, we're in July. So let's say you're making your August package, your August data mining favorite picks based off of the data mining that I have, okay? So you'll create a watch list. If you do it in Thinkorswim, it's super simple, right? But I say rolling watch list because some of these trades that are starting in July, they may have a great seasonal percent move all the way until, let's say, October. So you want to carry that over and add it to your August. Does that make sense? And then when the ones go away, you can then eliminate them so that you only have things that you're looking for. And what happens is then if you just have a watch list of data mining as one of your main watch lists, anytime you get triggers during those windows, I mean, you're talking huge opportunities to make money, folks. Okay. Yes, nothing's guaranteed. I wish it was. But remember, these are trades that you can select with 80% probability, 90% probability, and that's just off the dates. If you then use a trigger, we all know I love the Laguerre trigger, right? You're going to increase your odds even more. Okay, so let's take a look. Let me slide over my charts here. And I was just showing this because Brad had mentioned that during a conference I did, how July is a good month, and Broadcom, this is Broadcom AVGO, is this is a great trigger right here. you know, Broadcom's heading higher. But anyway, so let me go ahead now, and what I'm going to do is I'm going to show you my bulls. Bear with me. I swing it over here. So this is what it looks like. And again, a lot of you already have this and you understand it. It'll still be good review. Okay. So what it is, and this is the stocks for bulls, this one. Okay. So what that is telling you is these are all long plays. It's a spreadsheet of all my long plays. Okay. And I've got two tabs, less than 20 days and greater than 20 day trades. Okay. I'm going to focus on the greater than 20. And again, that doesn't mean you have to be in greater than 20 days. It means the window of the mining are greater than 20 days. Okay. So just so you're clear on that. Okay. So what I did was I sorted by entry date. I did December, just a few Decembers here to give you an idea. So here's December. Okay. You can sort by percent wins. Okay. Or what's very important is the average profit. Okay. It's amazing. You'll see some of these huge profit opportunities. Okay. You can sort by the number of trades, by the number of winners, or the number of days. So all you do is you click on these little drop downs and you can sort any way you want. Okay. It usually defaults to the entry date. So that way, you know, that's how you build your watch list. But I know many traders that are all of a sudden they go to, hey, I want to see if there's anything with 100% wins. And there are, by the way. Okay. Or I want to see the ones with the biggest average profit, put that on my watch list for the year. And even if I only trade 40 trades throughout the year, right, these are the ones with the biggest potential profit. So, you know, again, this is what we're going to kind of go over. So let's look at one. Okay, so this is CMS Energy Corp, CMS, okay? So again, the entry date from a pure data mining standpoint is December 1. The exit date is February 13th, okay? This has made money 83% of the time, okay? And again, you get to sort by that, but 83% of the time, okay? The average profit on these wins is 11%. So basically what that is 29 out of 35 years, this has gone up an average of 11% during this window. Okay, so does everybody understand that? And again, I don't just go in here and exit here, but in order to data mine, you have to have dates, okay? And if you did, you traded this for the last 35 years, you've done really well because you've made money 29 out of 35 years with an average of 11% profit, okay? But that's not how I do it. So let me bring up the charts here on CMS. And again, what we're going to look at here is December through middle of February, okay? Okay, so CMS. So December through middle of February. So I'm going to do is, and by the way, I'll go in as early as 2 weeks early. So I'm going to actually go into mid-November here, okay, right about here to look for entries. And I'll exit it out, you know, right around February there, right around February. So this is the window, okay? Now we actually had a trigger right here on November 14th. Okay, so if you got in the 2 weeks early, right, it was at $60 roughly, okay, and it went up to 68.9, okay. I'm not going to talk a lot about strategy today of when you would get in or when you would get out. There's a lot of ways I play this, okay. You can wait until you hit the average profit on the stock. I don't trade the outright stock. I make much larger returns by doing the options, right? So if the average profit on this one, as I mentioned, the average move is an 11% profit on the stock. Think about the percent you're going to make on an option play, right? Much larger, okay? Typically what I do is if I get in, you know, as soon as it's triggering, you know, so this was November when I got in, okay? If I know that this is typically a trade from the data mining that is good till the middle of February, then I'll usually do about a March expiration on my option play, okay? So I'll get in within, in November, but the expiration of the option is typically in March, okay? So, if I was in this trade, the way I would do it, just to kind of show you so you had an idea, okay? Once I get up 50% on the option play, I eliminate half my position, take profits, okay? Then the next half I let it run, knowing that you have these type of opportunities, okay? Let me change color. I like yellow better. Okay. So there can be multiple triggers. So right here, let's say you missed it or you didn't take it, you got a trigger here. This is just the Laguerre RSI, one of my favorite trigger. And what it is when the Laguerre, which is this blue line, goes into the green and then comes back out, or curves in some cases, okay, those are my entries. Here's another one. That was a beautiful one, right? So you had 1, 2, 3 opportunities during that nice data mining seasonal window. Does that make sense? Any questions on that? And more importantly, in many cases, because I do a lot of mentoring, and one of the questions I always get is, how do you know which direction? Folks, do not short this stock during that window, okay? Don't do it. Can you still make money? Oh, yeah, of course you could, potentially. But why in the heck would you want to short something knowing that there's an 83% probability it's going to go higher over the last 35 years it has, right? And that's where it can also come into play. Why go against the grain on something? Unless you just want to give your money. And if that's the case, I'll give you my address. You can ship it right to me. Okay, I'll take your money if you want me to have it. So let's do another one, just so this is more of a working session, because I get a lot of questions on data mining and how do I use it. Okay, so let me bring over the data mining again. Okay, McGraw Hill, MHFI. So again, this is a December 1st to mid-February. So same type of trade, profits pretty close to the same number of years, right? In fact, let me go slow here. So the enter date, we start looking for longs. Hold on, I got to change color. December 1, I go in, I'll look 2 weeks early though. So middle of November, and it ends middle of February. This has gone higher 83% of the time, right? 82.4. The average profit on the stock itself is 10%. So again, an option play is much higher if you play it right. And this has been in 34 years, this trade, right? 28 out of 34, it's been successful for that 10%. Okay, so not bad, right? We've got way better than this in the data mining package. But again, if a broker called you up right around the end of November, right, you're having your Thanksgiving dinner and said, "Hey, I've got a trade idea for you. This stock's gone up 10%, 83% of the time. Average profits 10% over 34 years to show that," you would probably want to buy that, right? AJ, yeah. So you have all the tools, so you can even absolutely use that in conjunction with. You're absolutely right on that. AJ was asking about the 20, 40, 60 along with the trigger. Okay. I told you I'm going to keep it simple today because this data mining that you have as well is super powerful on its own. But absolutely, with those tools, I mean, you're just giving yourself every opportunity to make money with high probability. Okay. So let's look at McGraw Hill. Man, I don't know if it worked this year. I haven't looked at these. Okay, let's see. So again, right around December, right, we look for long plays on McGraw Hill. They might have got bought out, actually. Let's see if they're even around. This might be one that'll be going away at the end of this year. You see how it's spinning? Okay, that one might be done. So I don't even keep up on when stocks, when we update it, we get rid of them. So let's go to the third one here, PEG. So it's the same thing on PEG. Okay, it's just shorter. It's just December. Okay. So on PEG, we start looking for longs for the month of December, 2 weeks early. Okay. 39 years has worked 82% of the time, 5% profit, right? That's crazy to know that, isn't it? So let's type it in there. Okay, so again, what I'm looking for, folks, you'll have it on your watch list, okay? You say, okay, 2 weeks into the middle of November, let's start looking for longs on PEG, okay? So here's November right here. You can see, oh, this is a great example. We never got a trigger in the month of December here during that window, okay? So we never took this trade. This year, this trade did not work out if you would have taken it just off of the days, right? But this is why I improve those odds. A trigger is when it closes above the green here, okay? Does that make sense? So again, this is just a great example of when not to take it, when not to take that trade. So next year when this is updated, okay, this is going to now be, it's worked out 32 out of 40 years versus 32 out of 49, okay? Okay. All right, let's look at another one. Let me clear this out for you. So one question Mike asked, great question. He says, how early do we get the data, or can we just put in a date and search throughout the year? So what I have here, what you get in this package is January through, you get the entire year, okay? So you can go right now and say, okay, I want to start looking at August, and you can, boom, you can look at them, or, okay? I update the data every Christmas time roughly, and then you get that updated, so you get, every year you get the updates, and yes, new ones come in, right? As I'm doing the mining, new ones come in, as companies like Facebook and that have more and more data, okay? Great question, great question. So you can create your watch list for the year in one sitting if you wanted to, right? Absolutely. Okay, so let's take a look here. Let me look at some that are pretty enticing here that I like based off of, and I'll show you what I'm looking at. So here's one, Granger. Okay, GWW. Okay, hold on, let me get my color here. GWW. From 12.9 to 2.7. But the reason I'm going down further, again, you can look at all of these, okay? But I'd like to look at the win rate, right? 88%. Again, I have a great client of mine, great friend, that he only looks at 90%, okay? Or maybe he may do 85 at times, but this has a 7%, almost an 8% move coming during this window of December 9th to February 7th. And so again, that 88.6, because it's gone higher 31 out of the last 35 years, okay? So again, incredible data to know, right? There's definitely advantages to knowing and understanding what that is. Okay. So basically right around December, we're looking for longs in Granger, GWW. So let's see if we triggered this year. Let me bring open my handy dandy pointer pen. So here's a trigger right here. Okay. Let me blow that up for you. So this was November 25th. Okay, so it meets our criteria. So if you got in at 320 or whatever option play you did. Okay. And then with it just Again, remember the end date on that, right? On that Granger was February 7th. So let me put that in there for you. Let me draw a line. So roughly right here is the end of the window. Okay. So if you got in here, okay, when did I get out? So one of my favorite strategies is I get in, you're making your money, again, which is highly expected, right? Because again, well over 85% of the time, this makes money during this window, okay? But I like to get out if I'm doing well, okay? I would have eliminated risk at 50% on my first, let's say I did a 10 lot option play, okay? When I get a 50%, I get out half of my position. And then I'll usually exit the trade when the Laguerre triggers short, right there, okay? So you're not always going to pick the top. That's almost impossible. I don't even worry about it. But in this case, it did a pretty good job of getting you out right before the high, before it took its other direction there, okay? And the funny thing is so again, because remember we had coronavirus, so this is an example when from a data mining perspective, this is a loss, folks, during that window, okay? Because you got in here and you exited here, that's actually lower, but we still made a ton of money based off of the trigger system, right? So it can be deceiving because, you know, in a data mining, now it's going to be down one less this year, but yet I'm definitely going to look for longs in Granger year after year during this window. Does that make sense? So again, one of the main reasons I wanted to hold this session, because I know a lot of you have this, is because then how do you actually use that? And this is exactly how I use it, okay? So there was only one trigger during that window this time, okay? But it was a good one. It was a good one. Daryl, send me an email, and we probably updated since, and you'll get the new one. Okay. So let me go ahead and delete that. So one of the questions is, what are your options at the money, in the money? So I think I need to hold another whole session on that. But let me kind of answer, and those of you that are part of my alert series probably know how I do this. But typically what I do is I always look at where the volume's at first of all. Okay, so if the window is from December to February, okay, I like to do a March expiration, and I have two strategies. You know, depending on how expensive the option is, right? If it's pretty expensive, I'll do right around a 50 delta. Okay, because the delta then, you know, you're going to get a good value. It's going to move 50 cents to the dollar, right? If it's a little bit cheaper price stock, so a cheaper option play, I'll go 70 or 80 delta because again, you're going to get more of that move. Does that make sense? So Jim, just send me an email. Okay, so absolutely, you know, simple strategies. I usually go at 50 delta if it's real expensive. Or a lot of times I'll look at the option chain at the month I'm looking, and I'll pick the one that has the most volume if I can afford it, or want to afford it, I should say. Okay. So, but I never go below 50 delta, then it's not worth it to me. Okay. Does that answer your question, Brad? Okay. All right, let's take a look at some more. Just again, so you can get in the habit of exactly how you do this. And again, so my point to this is when we looked at CMS here, right? It starts in December, ends in February. Your January watch list, you're going to have this as part of it, right? Well, when you then create your January, what I recommend is transfer that over still, because you know it's still a good seasonal long until the middle of February. So that way you're not forgetting about, you know, what a lot of people have been doing is, that's why I want to again have this webinar, is when they get to January, they just look at the January ones and they forget about these December ones. Or even then some of the November ones are still good longs. Okay, so you can have a pretty good list of opportunities each month, rolling them over. Okay. Okay, so And again, when you're sorting, all you do, and I'll show you at the end here, but you just click on these and I could go average profit. So for example, all I have here, I sorted by December. Okay, these are all my Decembers right now. Okay. So from there you can go, okay, now I want the ones with the highest average profit. I'm going to sort largest to smallest. Okay. So bam, Best Buy, 30% profit, right? December 29th to March 25th, okay? Now, with COVID, let's see how this would have worked out, right? If we just go based off of dates, so let's look at Best Buy. That'll be fun, okay? BBY. Okay, so let me blow it up for you. So we're right at the end of December, right? So the middle of December is when, in theory, we start looking. So the actual trigger I got on Best Buy was around January 6th, right here, okay? So let's say, I don't know, what is that, 86 or so, okay? So we would have made our money up to 91, okay? And then we would have been out. Okay, so I don't know what I don't remember what percent. I don't know if I even took this one, but my point is, or you had another trigger right here if you didn't get in there. Okay, so you had two triggers during that window. Okay, and then the next trigger, 1 and 2. So then you had COVID, right? But you could have still made money on this Best Buy. So even though, again, so the window on Best Buy is 325. So this is going to be another one this year when I update the data. It's going to show as a loss on the data mining, but we made money on it. Okay? So that's why my point over and over again, some of these 90% probability trades are even higher than that. Okay? Higher than that. Okay, let me grab another one here. I know you're like, oh, show me some more, right? Micron, I love Micron. So let me show you it over here. So Micron, middle of December to the end of February, 25 out of 30 years. Okay, so again, let me make sure you're clear on that. Middle, hold on, let me grab I'm struggling today with color. 1219, exit 227, 84% of the time. Average profits 22%. So basically saying when it does make you money 25 out of the 30 years it has, it's a pretty nice percentage of the stock, right? Again, think of how much you can make from an option play, okay? So let's go in to Micron. We'll start looking right around the beginning of December, right? Okay, so MU. Okay, so beginning of December is right here, all the way to 227 roughly, right here. Okay, so this window. So what do we get? When do we get a trigger if we did it all? Okay, we got one. So we missed this initial move, okay, early. The trigger was right here. So if you got in right here, which is what, 50, I don't know, 55, it went as high as 61 there, okay? Not a huge, that's not 20%, right? 55. And the way you can check that out, so the average profit is based off the stock price, right? So let's say you got in at 55 and you just want to get out at the average profit that I give you, okay? The way you do that is you get your calculator out and you say, okay, $55 I got in. The average profit's been 22%, right? So 55 times 1.22 is 67. So my initial goal would have been 67. But on an option play, again, you don't want, when you're up here, you're making your 50% profit on the option. You don't ever want to turn that into a loser. And I'll hold another webinar on strategies and that, but I'm just trying to show you the power of the data mining today, okay? Okay, let me do one more, okay? And what I'll do something fun for you here. So let me actually, just so you can see how that happens. So remember, I only checked December here, okay? Let me select all, okay? So I'm going to hit select all on this spreadsheet. These are just bulls, okay? The bears is totally separate. The futures and Forex is totally separate, okay? So now I've got all the entry dates for everything. And now I'm going to sort by percent wins within that, largest to smallest, okay? So yeah, there's a few 100%, okay? Netflix is one of them. Now, granted, it's only 17 years, and I say only, okay, but that's quite a bit. But look at these 97% win rate with 34 and 35 years of data, okay? I mean, it's absolutely incredible, folks. But let's look at Netflix. So Netflix is this: 121 to April 13th, 28% move, 17 out of 17 years, okay? Again, because of COVID, is it going to be only 17 out of 18 now? It may be. Let's take a look. So Netflix. Let me bring it in smaller. So Netflix is from 121. So really the mid-January, okay? We go 2 weeks early. We had a nice trigger on Netflix right here. All the way to April 13th, okay? So no, actually, here's April 13th. It did end up higher. So it'll be 18 out of 18 when we update this, right? But people always say, okay, well, when are the best times to enter Netflix? Well, this is one of them, right? So if you got in right here, folks, at 3:30, let's say, okay? When did you get out? Let's say you got out right here, okay? At 370, okay? And that's just the meat of the trade, okay? You're never going to get the top and the bottom, okay? And then you got another trigger right here. So after COVID, when do I re-enter Netflix? Right here, okay? Make sense? So again, how do I use this? I keep them with watch lists. I have some folks that actually print this out and they just use it manually. But to me, if you spend the time up front, you create a watch list, and then you just move it to the next month, the ones that are still relevant, okay? You can even put on your charts, you know, the percentage and everything. You can have it all there, okay? It doesn't take long, and then that's your, again, I'm more than happy if somebody emails me and they want somebody that's been doing it like that. I'm more than happy to connect you with them. But I know a lot of you here on this webinar already have this, so I wanted to do this webinar today to make sure you're using it the right way, okay? Again, you can sort by average profit as well. You can say, okay, I just want to know the ones that have the largest profit coming up for the year, okay? Monster Beverage, right? From end of March to July, it has a 31% move 80% of the time, okay? You know, again, probably my favorite right now from a data mining though is that Netflix, because it's 100% accurate with a nice 28% move, right? I mean, that's a nice move, isn't it? And remember, this profit is on the stock, much higher on the option plays, okay? Okay. Okay, let me bring the slides back over here. I'm gonna keep it this way so that I can copy and paste a couple of things. So, all right, so we're right here. So again, what I wanted to mention was they're updated every year, roughly Christmas into January, right? And that's all part of them. You get the updates. And so what I'm offering right now for the stocks first, okay, these are the stocks, 50% off. So with this link, and I'll paste it in, and when after the recording, we'll send this out to everybody, okay? You click on this link, and you can have the bulls and bears 50% off. Or If you're just trading futures and Forex or you want those as well, you can use a coupon code for the Forex and a coupon code for the futures. And again, didn't spend much time on futures and Forex today just because I didn't want to keep you long today, but same scenario there. Okay. So let me, for those of you that want to get going right away, let me paste this in there, but I will also send this in the recording. Let's see here. So I need to paste it to all panelists. That first one is the stocks. And by the way, type in questions as you have them here. I'll stay on for a few minutes. And here are the futures and Forex, okay? Okay. And if you have questions, reach out. Here, let me also type in, this is my personal cell phone. If you have questions you want me to answer directly, that's my cell right there, okay? All right, let me go check now, see if there's any questions. No open questions? Okay. Let me check the chat box. Okay, I don't see any questions, so that's fantastic. It must mean that it's clear as mud, right? So again, after the recording's done, I'll send it out to everybody. We have had some issues with spam, so if you don't get it by tomorrow, reach out to us, but you shouldn't have any issues because you're registered in here, okay? Yeah, and if you already have the bulls, for example, you want the bears, just send an email. We'll give you 50% off just the bears, okay? Absolutely. Okay. All right, so let me go back to the charts then. Let me show you a couple things here. So one of the big plays I like right now is bonds to the long side, okay? So in the futures market, like the 10-year notes, okay? Let me make this smaller. So July, August, very, very high probability. So keep an eye on this in your charts, okay? Going higher. We had a nice trigger back here, and we did an option play and we're out, but we'll look to re-enter with a pullback. So if you only trade stocks, you can look at like TLT, okay? Or you can look at TMF. Again, high probability it's going to continue higher, but this is a beautiful trigger. And we had high probabilities that this trigger here was going to go higher, and it did, okay? That's how you need to trade. High probabilities, because it's already tough enough to trade, and there's nothing for certain. And I don't win every time, okay? But my expectation is in a trade with a great trigger during a high probability opportunity window is that I have a really good chance to go in my favor because, again, for whatever reason, institutions buy during this time. So let me buy with them, okay? All right, folks, remember, just as a tidbit, right? And again, if you listen to this recording in the future, it won't be any value to you as far as what I'm going to tell you right now, but typically tomorrow is a very bullish day in the market. So, it is what it is. Nothing's guaranteed. We're getting close to a short-term top in the markets, but tomorrow should be higher. It typically is with over 90% certainty tomorrow. So just a little tidbit. Okay, so if you have any questions, reach out to us, folks. Other than that, I'll give you the rest of your evening to yourself. Thanks for listening. Brad, I haven't been doing webinars for them in a while. My schedule just got crazy, and then they're using somebody else because I couldn't do it for a while. But who knows? I may use them. I may be doing for them again in the future. All right, hope that was helpful, folks. Again, take care. I wish you the best. Goodbye.